All right, good afternoon, folks, as we head into US trade on Thursday, the 20th of July. And we'll just look into markets and we'll see what is going on. Relatively subdued markets, certainly in terms of the stock markets, which you can see here. U.S. stocks, Nasdaq, the S&P 500 futures slide after Q2 reports by Tesla and Netflix. Slightly negative earnings from Tesla, due to price cuts from Elon Musk, and then further comments this morning that he is going to continue his price cuts into Q3. So a bit of negativity surrounding the shares of Tesla at the moment. They were down 1.3% in kind of pre-market trading last time I checked, and they are slightly underwater in terms of pricing today. Netflix as well missed analysts' quarterly revenue estimates. Again, further bit of negativity surrounding those two major companies when it comes to US stocks. Now, that's something that we need to keep an eye on. If those negative earnings, begin to take effect and begin to kind of continue. And again, this week not the busiest week of earnings, but as we get into next week, there's a lot of companies out posting their earnings next week. So maybe that's the theme we need to keep an eye on into next week. We do have the Fed next week, and if you get a raft of negative earnings plus the Fed continuing to stick to the script that they are going to hike interest rates twice, as an environment that is negative for stocks and positive for the dollar, which we were expecting a bit of bounce back in the dollar. If you go back to Monday's videos, Monday, Tuesday, Wednesday is kind of what we were predicting, and that has played out as of now. Again, not much of a bounce back, but certainly a stalling of the uptrend and an attempt at a move lower in the price of, so I was going to refer to euro dollar, but obviously a move higher in the price of the US dollar. So something we'll look at once we get around to charts now in a minute. Reasons for that, but we'll digest that now in a second. Apart from that, there's not really a lot going on in terms of fresh headlines for us to look at. This article here, cooling UK inflation may signal time for rethink for sterling bulls, especially if the US dollar pushes higher, with those inflation figures coming in weak yesterday in terms of the UK. That's an environment where cable pushes lower, and there's heavy long positioning in the price of cable, highest post-Brexit. So it is something we will keep an eye on in the coming trading sessions ahead, maybe to create some more fresh opportunities to us. We were looking at selling rallies into yesterday, didn't quite get back to the level that we were looking at, but selling rallies yesterday did prove fruitful, or over the course of yesterday and into today did prove fruitful in terms of the price of sterling. Apart from that, you can see a stock index is pretty mixed across the board. There's not a lot to see in terms of the US equity futures, apart from the Nasdaq, which is down 0.5%. Obviously, the weighting of Tesla and Netflix is slightly higher in terms of the Nasdaq. So when it's referring to tech stocks, obviously Nasdaq being the technology index of the US stock indexes, that is the one that gets hit most heavily. So worth keeping an eye on that. It is up 40% year to date. So maybe there is a bit of room for some downside on the price of the Nasdaq. Apart from that, European equities higher, relatively higher across the board, with negative German PPI print this morning showing less of a problem for inflation, and that is a situation where the central bank may look at stop hiking interest rates. Obviously, you're going to need more developments than that. It's not as easy as just one negative print to stop hiking interest rates, but that is the kind of reaction that you'd be considering, and is a reason for a bit of stock upside across the eurozone. Asia Pacific equity futures mixed, but commodities higher across the board. Slightly unclear as to why they are higher across the board, but they are not. There's not too much movement in the price of them. Not much percentages up. So we'll keep an eye on that going forward. See if we can figure out why US bonds and global bond yields are higher across the board. Now, to me, it's slightly unclear as to why they are higher, but that is driving a bit of positive price action across a few of the dollar pairs, which we'll jump over to now in a minute. A bit of strength in recent trade in the US dollar. So again, we'll break that down once we get through the charts. We can illustrate that a little bit cleaner. Australia, they had positive employment figures out of Australia. Now, with the central bank monitoring employment and saying that the high levels of not the high levels of unemployment, the high levels of employment, the strength of the labor market continues to put pressure on inflation. And if that continues to happen, if you have continued strength in the labor market, will continue to put pressure on inflation, and then that will give the central bank more of a need to come back in to hiking interest rates. So that is a reason for Australian dollar upside. Kiwi dollar then follows that. Sterling lower across the board, again in line with those inflation prints yesterday. Something to keep an eye on, certainly, as we go forward into the coming trading sessions. Across to the calendar, as we can see, those Aussie employment figures, consensus 3.6 for unemployment to tick up, did not tick up and remain firm in relation to last month. The employment change popped up by 32,000 above the 15k, which was expected, and most of them full-time employment. Now, a lot of full-time employment jobs added, lower part-time, more full-time jobs added, again putting a slight bit of pressure on inflation. PPI, you can see out of Germany, minus 0.3%, following a minus 1.4%. So if you bring into that, you can see a lot of negative prints since October of last year in terms of producer price inflation. Obviously that should then feed in, or continue to feed into CPI, consumer price inflation. Obviously the cost of making goods, if the cost of making goods pushes lower, and the cost of purchasing goods should then follow suit as well. So some positive developments, or another positive development in terms of the fight against inflation, certainly in Germany, which obviously is a massive contributing factor to the European economy as a whole. We do have some jobless claims out of the US at 1:30, really the main focus of attention when it comes to 1:30. But so negative data past 2 days has sparked a little bit of upside, but with this negative data plus then negative earnings, it kind of increases the situation where you might see a downturn in the economy, which is what a lot of market participants are predicting as we head on into the coming quarters ahead. So there will get a point where a lot of negative data starts to become a negative, and that's actually just a downright negative for the economy, rather than just the central bank stopping hiking interest rates. But no high impact economic data on the docket as we head into today's US session. We can see euro dollar pushing lower, cable pushing lower. Aussie, after this pop higher, has had a bit of downside in the last couple of hours. The Kiwi dollar is making an attempt lower. This dollar Swiss has gone through the roof in the last this hourly candle, which is in space of 20 minutes. So it's slightly unclear as to why dollar Swiss is moving more aggressively than everything else. But you can see selling rallies over the course of this morning did prove fruitful in terms of sterling, but that bounce back in the US dollar continues. Now this euro dollar, it is making an attempt lower. It's not really pushing lower with any sort of aggressiveness, so something we do need to keep an eye on. Did breach this support level we were looking at yesterday over the course of yesterday's US session. Does this continue lower and start to print fresh lows? Obviously that remains to be seen. A bit of a reason for US dollar upside though is this 2-year yield continuing to push higher, and this is trending higher over the course of this week, which is interesting. I think obviously it's substantial downside off the back of those CPI prints from last month, but now you are, or a week or two ago, so now you are seeing a bit of upside in this 2-year yield. I mean, the longer that continues, the more pressure it's going to put on stocks and the more support it's going to lend to the dollar. So in terms of resistance level, that 4.9% is really a next resistance level up there. In terms of what you then suggest in between that, makes it a little bit unclear. You'd have to imagine we did breach through this resistance level earlier on in today's session. Now, if that comes back to test that and holds and continues to push higher, that is likely to lend more support to the US dollar. Apart from that, you can see the S&P, the Dow Jones holding firm, not really pushing higher with any sort of pace. The Nasdaq has obviously had a bit of downside, which we've alluded to earlier on, has come back to this bit of a support level of 15,700 and has bounced off it. Be interesting to see how the US market participants feel about that when they jump on for trading in about an hour's time. Russell grinding higher, not really at any sort of pace, but the DAX kind of chopping sideways. Bit of upside off the back of that PPI print this morning, but lack of clear direction across stock indexes. Apart from that, FTSE, which has had further upside this morning off the back of those negative inflation prints, seen as a positive for the stock market, as the Fed, or not the Fed, the Bank of England may not hike interest rates at the same pace that markets had initially feared. And that's sort of where we're at in terms of markets today. Slightly tricky to pinpoint direction from some charts, but this 2-year yield, as it continues to push higher, does seem to be lending a bit of support to the US dollar and is helping to keep US stock indexes subdued at the moment. So with those negative earnings and yields pushing higher, is that a situation where these stocks push lower in today's session? That's what it's looking like, but difficult to predict stock downside at the best of times unless something major happens. So I wouldn't consider this too major as of now. Certainly a bit of negativity, in my opinion, as we head into US trade for today.